Welcome to our latest question and answer video. I'm Pratap here. So this is the question asked by Rohit. So let me appreciate Rohit because it is a very good question and he is able to ask this question because he is learning the concept in detail. He is keenly observed each and every point we are discussing. That means he is having lot of interest to learn the supply and demand zone price action, and he wanted to be an expert trader by using supply and demand zone price action. So that is the reason why each and every point he is observing, and also each and every point he is learning. That is what I am able to understand. And I expect everybody should be like this. If you learn the things in this minute level, you will be a very good demand and supply zone price action trader. And you are going to be a very good trader. And what is the question? The question he asked, are we allowed to consider the hidden body ERC candle as a legout candle? So what is the answer I said? We can consider as long as the hidden body conveys the legout structure. That is the key point here. The hidden body should convince our legout structure. Otherwise, we should not consider. If it convinces, yes, we can consider. But here, the real challenge is how it will convince. What way we have to look into this legout structure? That is what I am going to explain in this video. Because in the next question, he has given clarity. What clarity he has given? The chart he is referring. That is Apollo Hospital. Trade we explained in our last video. And at 2 minutes in that video, I have explained about an ERC candle. And that particular candle, how we should consider as a legout? That is his question. Let me show you the chart, you will get the clarity. So this is Apollo Hospital's 75 minutes chart, and here we have drawn a supply zone, and this supply zone we have drawn inside the daily supply zone. We have a daily high liquidity zone. Daily high liquidity supply zone. In that supply zone, we fine-tune to this 75 minute zone. But look into the candle, the legout candle, how it looks like. Is it looking like a drop candle or is it looking like a rally candle? By looking into the body, it is looking like a rally candle. But what kind of candle it is? It is a failed ERC candle. But failed ERC candle, you should not look into the candle based on the body of that candle, because body is very tiny compared to the entire range. Previously I told you at least 40% body should be there for the failed ERC candle. In our first lesson, training lesson I have explained. Probably this body is a little less than the 40% of this entire range. That's why we are not in a position to identify whether it is a rally candle or it is a drop candle. But how I am looking into this candle? That is what you should understand. And also, you should also focus on two important questions. Question number 1, in case if we consider this candle as a legout candle, let us assume it is a valid legout candle for time being until I complete my explanation. In such kind of situation, this zone should be used as HTF zone, or it should be or we can also use it as a entry zone. We have two questions. First question is this zone is valid as a HTF zone, higher time frame zone? Second question, is this zone valid as an entry zone? So you have to get answers to both these questions. So by end of this video discussion, you will get answers to both these questions. First, let me focus on my first question. What is my first question? can we use this zone as a HTF zone, higher time frame zone? That means what is your entry zone? Your entry zone should be probably 15-minute zone or 5-minute zone. Definitely not this 75-minute zone. For that, first you understand the structure of this candle. So I have removed all the zones we have drawn. So now it is a plain chart. Now this look into this candle because we have a lot of questions on this ERC candle. When the price is opened, this is the area price is opened. And then it reached the low. And then it reached the high. And finally it closed here. So we have 4 important points we can observe in this particular candle. That is open, high, low and close, OHLC. And each point, we have 4 points, open, high, low, close. In each point, how I am looking into this candle, that is very important. In each point, I repeat this question, each point, how we are looking into this candle. That means when the price is at open, how the candle looks like. When the price is at low, how the candle looks like. When the price is at high, how the candle looks like. And finally, when the price is at close, how the candle looks like. That kind of view we have to develop. If you want to become a very good trader, you should have such kind of views. At least 4 different views should be there in your mind. And let me show you the first view. What is the first view? Okay, now what I did is, I removed the entire thing, starting from this ERC candle, everything I have removed from the chart, so that I can explain you this concept in an easy way. Okay, this is the latest candle. After that, between this high, low, open and close, between these 4 points, a new candle will be formed, going to be formed. A new candle is going to be formed. Now we want to look into that new candle in 4 different aspects. At each of these points, we need to look into the candle. What is the first point after this? Open. Because a day always starts with open. So where is the open? This is the open. So next candle is opened here. Assume that whatever the candle you are seeing on the chart at this point of time, that is the previous candle. Now a new candle is going to be formed at this open. So at this open, how the structure looks like a candle? Like this. Because the prices opened with gap down. When prices opened with gap down, your candle structure looks like this. Now tell me, what kind of candle it is? It is a bearish candle. It is a drop candle. Now how the pattern looks like? We have a rally candle as a leg in. We have 3 base candles and then we have a leg out candle. The leg out candle is a drop candle. So when this structure is valid at the time of opening the market, at morning 9:15 a.m., morning 9:15 a.m., this is the structure of this particular chart. We have a supply is there in this chart. We have a rally, base and drop. And what about after some time? After some time, prices reached the low of that particular day. So this is the low. Now how the candle structure looks like? So it is looking like this. Still it is a valid rally, base, drop. And after that, what happened after some time? All of a sudden, market dynamics are changed. I always say market is dynamic. Time to time, market will be changing. When market is changing, we should try to understand the changes. And also we should adapt ourselves according to those changes. If you are thinking like that, always you will become a very good trader. Please remember. Okay, after some time what happened? Prices moved up to the high of the day. Where is the high? This is the high of the day. From where prices are traveling? From the low, the prices are traveling towards the high of the day. from low to high, how the price structure is changing now. Now all of a sudden, rally-based drop is changed to rally-based rally. Now if you try to draw a chart, if you try to draw the zone at this point of time, I'm talking at this point of time, when prices reached the high of the day, at that particular point of time, we have a rally and 3 base candles, and then we have a drop, and then we have another rally. Now we are able to draw a demand zone. Earlier we have drawn a supply zone. Now the supply zone structure is changed to demand zone because of huge change in the demand on that particular day or on that particular candle. This is a 75 minutes candle. On that first 75 minutes of the day, the first 75 minutes of the trading day, all of a sudden, the price structure is changed to rally-based rally, a demand zone. At some point of time before, at this point of time before, the structure looks like rally-based drop, and all of a sudden rally-based drop is changed to rally-based rally. See how dynamically the prices are changing. And finally, at the time of closing point, where is the close? This is the close. Now comparing from the high of this day, high of this candle, comparing from the high of this 75 minutes candle, now what is going to be the new structure? The new structure is like this. From high, the prices came down, a drop, and remaining whatever the price movement during that day, it is a bullish movement, but that will become a wick of the candle. But is it your original candle? No. That's why this at closing hour of this candle, this is the price structure. That's why the wick I still kept in green color. Generally, how you keep the color of the candle? The wick you keep in the same color as the body. But the reason why I kept green color is this is not the original candle. This is my view, my candle's view at closing hour of this candle, comparing from its previous high. Comparing its high of the candle, at the closing hour, I am looking into the view. This is the view I am looking into this candle. And based on this view, I want to take a decision. What kind of view it is having? We have a rally candle, we have 3 base candles, and then we have a drop candle. So that means now it is giving a picture. What kind of picture? Rally, base, drop. Now this is how the candle is, finally the structure is looking. Now based on this structure, I want to draw this zone. Which zone I am getting now? A supply zone I am getting. Rally, base, drop. Is it a valid supply zone? Here we should get 2 questions. One question is it a valid supply zone to consider higher time frame, or is it a valid supply zone to consider the trade? That means you want to take a trade directly on the 75 minutes. At the time, can we consider such kind of structure? What kind of structure it is? A dynamic structure, not static. Static structure you have already seen on the chart. This is dynamic structure, not on the chart, in your mind. Whatever is there in our mind, I am showing you on the chart for your easy remembering purpose. But this is not the original structure of the chart. This is the dynamic structure of the chart in our mind based by comparing high of the candle and close of the candle. Because from high, the prices came down by the time of closing the market. By considering that price structure, this is a purely dynamic. And when you will be able to draw such kind of zones, when you try to understand the dynamic nature of the market, you will be able to draw such kind of dynamic zones. That's why I told this is the most advanced level concept. Okay. 1 point out of these two questions. Let me answer the first question. What is the first question? Can we consider such kind of zones as our higher time frame zones? The answer is yes. Such kind of zones you can consider as your higher time frame zones. What is higher time frame zone? The zone that is used for identifying the location. We have two types of locations. One is buyer's location and another one is seller's location. Of course, you have again third type, that is equilibrium. Time being, let us leave that. By drawing the supply zone, we identified seller's location. Where you identified the zone? Inside the daily supply zone. We have daily supply zone. That is our original point, because we have started our discussion from daily supply zone, which is a high liquidity zone. We went one time frame below, that is 75 minutes. In 75 minutes, we identified this kind of dynamic structure. The static structure is what you have seen on your original charts. This is the dynamic structure I changed in my mind by comparing the prices from high of the candle and close of the candle. So at the time of closing, prices came from high of this particular candle and finally closed here. And this itself is given an indication. What kind of indication? When we get such kind of candle, closing candle at the time of closing, when we get such kind of candle, that indicates a strong sell order flow. That means a institutional sell orders are there in this area. Which area? Whatever the zone we have drawn, in that zone the sell orders are available. A strong order flow is there. That's why from high of the candle, finally prices came, and after that they didn't recover. Till the close, the prices were moving down, 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 down and down. That itself indicates a strong bearishness in the market. And I want to identify that bearishness, where exactly it is there. Its origin I want to identify. Where the real order flow is there, I want to identify. How can you identify? If you are able to draw a zone like this, a supply zone like this, and then further fine tune this supply zone at 15 minutes level time frame or even 5 minutes level time frame, you will be able to identify the real origin where the actual institutional order flow is there. Your order flow is nothing but their pending orders. Because next time again prices reach that area, definitely prices will go down. Because this candle indicates this dynamic structure, this is not static structure, this is the view in my mind. That's why the view in my mind I am calling it as a dynamic structure. This dynamic structure is exhibiting there is a strong order flow inside this candle or inside this structure. So for that, what you have to do? Again further go down one more time frame below this particular chart. So let us go one more time frame below this. So this is the original chart what I have drawn. This is the dynamic structure. See, the static structure looks like rally, base, rally. It is looking like that. But what is my dynamic structure? Whatever the chart I have drawn. Why I drawn my chart like this? Because by keeping a view like this in my mind. In my mind, I have this kind of structure. Not the structure you are seeing on the chart. Have you seen the difference? Whatever you are seeing on the chart is like this, but whatever I am seeing in my mind in this chart is like this. This is the difference between what you are seeing on the chart and what is there in my mind about that chart, And this is a dynamic view. The moment you are able to build such kind of experience or such kind of visualization in your mind, you will become a very strong player. A strong trader. You will become a very strong trader. Of course, a player, a market player. So because I am predicting, it's not predicting, suspecting, I am suspecting there is something is there inside this zone. What is that something? The real institutional sell order flow. So how I can identify? Go again one more time frame below. What is one more time frame below 75 minutes? That is 15 minutes. So I went to the 15 minutes chart. Here, inside this 75, whatever the light red color we have drawn, that is the 75 minutes zone. This 75 minute zone is there again inside the daily zone. The very light color is the daily, and compared to this light color, there is some more thickness we added. That is 75 minutes. In this 75 minute zone, we have identified a chart, a zone. We have a drop, we have a base candle, and we have a drop candle. Drop, base, drop. And is this zone is there inside the 75 minute zone? Yes. But this 75 minute zone is not actually a real drop, base, drop as per our static charts. In our static charts, it looks like a drop, base, rally. But in our mind, we visualized it is like a drop, base, drop. And then inside we have identified again a drop, base, drop at 15 minutes level. But if you look into this zone, still the risk is high in this zone. When the risk is high, what you have to do? You are not allowed to take the trade. That's why what we do, the technique we follow. What is the technique? To minimize the risk. For that we go one more time frame below, that is 5 minutes area. So the moment I went to the 5 minutes, inside this 15 minutes area, I identified the real order flow from where it starts on the 5 minutes chart. So let's go to the 5 minutes time frame. Inside this 15 minutes time frame. So inside this entire 15 minutes time frame, now I identified a drop, 2 base candles, and again a drop candle and a follow through candle. That means it is a very good zone. And now we are able to identify the real order flow where it starts from this entire area what we have drawn on the 75 minutes time frame. See, this entire area is our 75 minutes. Inside this 75 minutes, we identified 15, and then inside that 15 we identified this 5 minute zone. I have removed that 15 minute zone, and 15 minute zone again I fine tuned to this whatever you are seeing. The 5 minutes, drop, base, drop. See, this is there inside 15 minutes. This is our 15 minutes. Now this 15 minute zone, I change it to 5 minute zone. This 5 minute zone is there inside the 75 minutes. This 75 minutes is there inside the daily. Anyway, this is a technique how we fine tune to identify the real origin inside the chart. The origin is having the actual order flow. Here institutional pending orders will be there. Because institution pending orders are there, what is the decision we have to take? Because this is a seller's area. Why seller's area? Because HTF zones we have drawn. We have drawn 2 HT higher time frame zones. One is a 75 minute zone. Again that 75 minute zone we have drawn inside the daily zone. And today what happened? Prices entered into this zone. See here today. Around 1 o'clock today means this Friday. The prices enter into this zone because the order flow is very strong. See, the moment entered, how the pending orders pushed the price down. You are seeing a strong rejection from this zone. After that, prices went down, and by 2 o'clock, before reaching the 2 o'clock, afternoon 2 o'clock, that is 14 hours. At 14 hours, see, at 13 hours we got the trade, and 14 hours it reached the target. That means in 1 hour we got the profit. How much profit we got? 4,837 rupees, which is 3.91% return on the investment. I am calculating ROA as per one future slot, so that our calculations are easier. In just 1 hour we got this profit. And how we are able to get this profit? By keeping a dynamic view in our mind. What is a dynamic view? So between the high of the candle and close of the candle, how the price structure is there, that price structure we kept in our mind and we have drawn. Why we have drawn like that? Because the candle structure is not clear. Especially failed ERC candles, candle structures are not good. That is the reason why beginning I have given my answer. If the candle structure convinces, then only you have to draw the leg out. Otherwise, we should not draw. And one point we got the confirmation. What is the confirmation? If the candle structure is convincing us, then we can use that zone as a higher time frame zone, so that we can identify the real order flow inside that zone by going to the lower time frames. That is what we did. From 75 we went to 15 minutes, from 15 minutes we went to 5 minutes, and finally we identified the actual origin. And that finally resulted as a successful trade. Okay, trade is successful, fine. Now still one more question is pending. What is that one more question? Let us go to this chart. Now we have drawn a zone like this by keeping the dynamic view in our mind. This is a static chart, but we have drawn the supply zone by keeping the dynamic view in our mind. Now can we take a trade directly in this zone instead of using higher time frame? Can we take a trade? Assume this zone is a 5-minute zone. Can we take a trade? My answer is no. You cannot consider this as a valid zone for taking the trade directly. Why? Because, see, your order flow might be there somewhere in the more deep into this particular zone, might be there. And moreover, 5 minutes area, what kind of order flow you will identify if you fine tune? You go to 1 minute, or you go to 30 seconds, or you go to 15 seconds. There you will find the zone. 15 minute zone or 15 seconds zone, not 15 minutes, 15 seconds zone or 30 seconds zone. How much push it can give? We don't know, we don't have the clarity. Because generally people who trade for just a difference, changes of 0.1% or 0.2% in the price changes, they will do the trading. Just 1 rupee, up and downs, they will do buying and selling of the stocks. There are people are there. But they place some hundreds of crores of rupees in their order. Just 1 minute's change in the price, they will start buying or they will start selling. For such kind of people, these 15 second zones or 30 seconds zones might be helpful to them. Just to predict that 1 rupee movement or 2 rupee movement for a stock having, say for example, a 1,000 rupee stock or 2,000 rupee stock. But we don't do such kind of trading because our capital is a very small capital. Definitely we will wait few hours time in the market until it reaches our target. Some people even wait for few days until it reaches the target. Some people even wait a few weeks or few months until it reaches the target. That is what I explained in the first lesson of our phase 2 training program. I think it is lesson 11 if I am not wrong. Lesson 11 or lesson 12, one of these lessons I explained. Different types of trades. Short-term trades, long-term trades, medium-term trades. So where we limited ourselves at 5 minutes time frame. So 5 minutes time frame, if you want to make use of such kind of zones, your results won't be consistent. The reason is, see, in one candle, several actions took place. What are the several actions? At some point of time, the market is a bearish market. After that, all of a sudden, we have seen when prices reach the high of the zone, we have seen a bullish market nature in that particular candle. Again, at the time of closing, again the nature is changed to bearish. When so many things happened in that particular candle, predicting the entry in that candle, predicting our trade by taking directly entry in that candle, is not advisable. But why we used this zone as for higher time frame zone? Because we have seen there is a bearishness in the market. That's why we want to fine tune and find the actual origin. If this kind of candle structure is there on the daily time frame or in the 75 minutes time frame, you can accept because you can fine tune up to 15 minutes or 5 minutes level and you can find a trade. But directly 5 minutes itself, if you are finding this kind of structure, that means you cannot further fine tune below the 5 minutes level. If at all maximum, if you are an experienced person, maximum you look at 3 minutes or 1 minute. But definitely you don't go at 15 seconds or 5 seconds or 10 seconds. Such kind of level you don't move, seconds level fine tuning. If it is a 15 minutes, if you are able to fine tune at the seconds level, if you are able to create a zone, then you will be able to identify. But you should not forget, if you are identifying a zone at the seconds level, your target is also going to be at seconds level only. A second level demand zone, a second level supply zone, how much price movement will be there? Not even 0.1%. We don't trade not for 0.1%. The reason is we are paying government taxes around 0.2% or 0.3% for each trade. That is our service tax and all. So what is the profit we get? Even if you get profit on the zone, still overall by paying the taxes you will get only losses. So that is the reason why do not take such kind of zones as entry point of view. So did you get answers to both the questions? First question, can we use such kind of dynamic zones? Dynamic zones means the view in our mind. The view in our mind. How the view in our mind? I have clearly shown you with step-by-step manner in this video. So with that view, if you want to go for your analysis, use that kind of zones for higher time frame zones, HTF zones, like daily zone or 75-minute zone. And what is the second question? Such kind of zones, can we trade? The answer is no, because generally you trade at 15-minute zone or fine-tuning or 5-minute zone fine-tuning. And when you fine-tune that level, taking trade with this kind of structure, dynamic structure, is quite dangerous. Especially ERC candles I am talking about. This is a failed ERC, not a ERC. Sorry, ERC is the wrong word. Failed ERC is the right word. You have two kinds of ERC candles. If you add a hidden body, entire hidden body looks like a bearish for the entire day. So drop candle. That is not a failed ERC. That is a ERC candle. There you can take the trade. For the entry purpose you can take, even for fine tuning purpose, that is a higher time frame purpose also you can use. But this one is a failed ERC. Failed ERC candle, and if you add the hidden body, the whole trading day, again two types are there in failed ERC. If you add the hidden body, for the entire trading day, the bearishness it is showing, then no issues. Then you can use that candle for trading purpose as well. And second scenario, this is the scenario. What is the typical scenario? What is this typical scenario? At one point of time in our trading day, it looks like bearishness. At another point of time in that particular trading day, it is looking like a bullish candle. Again at the time of closing, it is looking like a bearish candle. So when a candle is showing so many different natures in a single candle, then use that candle only for fine tuning purpose, don't use for trading purpose. Hope it is clear. Still, if you are having any question on this understanding, again please mention clearly what could be still you are not able to convince. If I am able to understand the points, again I can give you one more video with better explanation. But I am hoping that this explanation might have clarified most of your doubts, or I can say you might have got already complete clarity. I am thinking. but I'm not sure. I'm just hoping. So if this explanation answers all your questions, I'll be very happy. In case if not, please mention in the comment section so that I will try to provide even better explanation. Thank you. We'll meet again in our next video.